Hello, and welcome to the Life Settlement Podcast, the podcast that helps you unlock the hidden value of your life insurance policy. And here are the two men that guide us through it from time to time, every episode, Mrky and Rob Haynie. Hey, guys, good to see you again.
Good afternoon once again.
Good afternoon, Bill.
Yeah, Rob. So we have somebody called the Retirement Genius on this podcast today. What does that mean? And is that really what's happening here?
Well, I'll give you a quick synopsis, and I'm going to give the floor to Chris. But I've known Chris closing in on 2 decades, and he is in fact the foremost retirement expert that I know, and certainly one that fits in nicely with the concept of life settlements. And I think Chris is going to tell us a little bit about that. He's got a very interesting career and is always full of fun facts and knowledge as it relates to both the topic of retirement and, more importantly, in our circumstance, life settlements. So without further ado, I'll let Chris take it away and introduce himself, and then we'll get going.
Well, yeah. So it's great to be here. Love being a guest on your podcast. And Rob, you've been somebody I've admired for years. All you've done, and Mark as well at LIS, the team there, pioneering life settlements. So the first time I ever commercially knew anything about life settlements was through your website, your company. Although I had heard about life settlements going back further to my political days when I worked in Washington, D.C. So, it's always an interesting path people follow to get from where they start to where they are today. And I didn't start with Retirement Genius, but 30 years ago, I did start working in Washington, D.C. And I had, in the early 90s, gone to Washington and worked in the White House. I worked on Capitol Hill for the Senate Majority Leader, George Mitchell, who was from my home state of Maine, where I'm based now. And then after 3-ish years on between the White House and Capitol Hill, I went over and I worked for the insurance lobby. I worked for HIAA, which now is AHIP. And then I worked for ACLI, and I finished my political career in DC in the early 2000s with ACLI. And I remember hearing the word viatical for the first time. It would have been the late 90s, right around 99, 2000. And I thought to myself, viatical, that's a scary sounding word. That sounds like Darth Vader. What is that? And what I saw was that the insurance companies didn't like it. And they were sitting around the table right from the get-go talking about how do we stop this viatical thing from spreading. And I'm a lobbyist, I'm listening, I'm learning, I'm watching. And what I come to realize when I did my homework on this was that what a viatical was the legal right of a policy owner to sell their asset. That a policy was an asset. And I had gone through, the legal findings from the Supreme Court going back to 1911 and going through all that. And I thought to myself, well, instead of stopping people from accessing their ability to sell their asset, shouldn't we be trying to figure out how to maybe integrate with this, work with this? But the industry didn't like it. They didn't want to see it moving forward. And after I left Washington, D.C., I remembered that transaction. And after a couple of years, I was doing some consulting, and I came up with, I was on a fly fishing trip with a bunch of executives from the long-term care world. And they were talking about all the struggles they have with people trying to access their services and how to pay for it. And they were talking about, we got to find other ways to help people pay for care. And I said, hey, have you ever heard of this thing called a viatical now? And by then it was, I referred to it as a life settlement. And that's when I had looked you up, Rob and Mark. I had gone on to I looked up life insurance settlement, brought me to your website. I did a little research on it and then talked to them about, wouldn't it make sense to educate your people who are working with families on this as a way that they could help people pay for care? And the industry executives immediately thought it was a great idea. And literally on that fly fishing trip at dinner we passed around the hat and raised $1 million and launched a company called Life Care Funding. And the idea was, how do we educate people and the care providers on this option? And before we knew it, it really took off fast. And within 3 or 4 years, we were in thousands of assisted living communities, home care companies, and we were working to educate them and arm them with information to work with families on how to use a life settlement to pay for long-term care. And we really even didn't talk to insurance agents, financial advisors for some more years to come. We were so busy just trying to work with all of these care providers and all the families that they were sending us that needed help with care. And we ended up funding millions of dollars of care using the life settlement transaction. And to sort of wrap up that point, what I came away from as that was evolving was that we didn't really look at ourselves as that we were a life settlement company. We looked at ourselves, in the industry that we were working with looked at us as we were a long-term care funding company who had a unique funding solution called a life settlement. And that's kind of how our company kept evolving over the years to where we finally launched Retirement Genius as a brand about 5.5 years ago.
Well, I'll give you another point. I'll just give you a backhanded compliment. So about 5 years ago, we tried to lobby Congress to put together a senior health planning account situation, which would allow the proceeds of a successful life settlement transaction into a dedicated IRS-approved account, as long as they use the funds to pay for, of course, what would be considered to be expenses related to healthcare, that it would be tax-free. That we borrowed from you, and you know that. It was just a different way to package it.
And I was happy to collaborate with you all on that.
Ran into a little thing called, absolutely. COVID kind of derailed that.
Yeah.
So I'll just make news here on the podcast that we're ready to start that again, because it's super, super simple. Thinking back to all the success, the way you explain it, the logic of you're using life settlements to pay for long-term care, which is still a crisis, probably tenfold what it was when you and I first met. And Mrky has something to add.
Yeah, I have a question, because, in most life settlement I have a question. I get this every once in a while, because in most life settlement transactions, whether we give a client $10,000 or $1 million or $2 million, whatever the number is, they don't just take that money and disappear. They're usually sitting right back down with their advisor. And what we see a lot is they'll roll that life settlement proceeds maybe into an annuity. And long-term care comes up. And one thing that I don't really know the answer, and you will have this, I'm sure, Chris, is it hard to get a client who fits for a life settlement, which we usually know if you're a client that's you're in your 70s or 80s, you maybe have some health ailments going on. You might be anywhere from standard to completely uninsurable. Your mortality rating may be on the very low end. If you have that client that you just have given $250,000 to through a life settlement sale, and he or she is 75, 80 years old, is it a challenge to get them qualified for long-term care, or is it just more expensive of a policy at that point?
When it comes to somebody who does a life settlement, the commonality for anybody who does a life settlement typically is they're aging and they have a healthcare financially driven need, oftentimes culminating in a need to pay for long-term care, which is one of the most expensive propositions impacting anybody's retirement. Long-term care can wipe out a lifetime of retirement savings in a year. But if you're going to qualify for a life settlement, you're not going to qualify for long-term care insurance. Typically, the upper age range for somebody to qualify for long-term care insurance is going to be 70. And add to that, they have enough health impairments that they're a life settlement candidate. They're going to be declined for long-term care insurance. But they could certainly be a very good candidate, and in fact are a very good candidate for an annuity that has potential long-term care rider options, underwritten annuities that will actually price even higher based on their age and their impairments. Or what we did is we always worked with the families and the care providers to help them position their money from the settlement so that they could be making payments on a monthly basis to their care provider. And in so doing, they have a couple of big, unique benefits. One is if they're underwritten as chronic, 2 ADLs or more, or terminal, 2 years of life expectancy or less, the funds from that settlement are going to be tax-free. And if they're using that money on their care needs, they're spending that money down on care, that's actually recognized as a Medicaid qualified spend down. So if you're going to end up on Medicaid, there's a 5-year look back window that Medicaid looks at your finances to see if you're qualified when you apply. And a life settlement done and used for long-term care purposes, it meets the definition of a Medicaid qualified spend down. So they would be private pay while they have that money. And this is important. There's a big difference between what you're going to receive for care if you're private pay versus if you're getting it paid for by Medicaid. That's basically the only two ways you can pay for care. Either you're paying out of pocket, you've got a long-term care insurance policy, you sell your house, you've got savings, income, investments. Somehow you're putting together $5,000, $10,000 a month to pay for assisted living, home care, whatever the case may be. But if you're on Medicaid, that actually means that you're below the poverty level. Medicaid is a program for the poor. And if you get rid of assets to quickly spend yourself down to poverty and go on to Medicaid, if Medicaid sees that you purposefully got rid of assets and hid assets, they will disqualify you from Medicaid. A life settlement used for long-term care will not disqualify you from Medicaid, but will keep you private pay for as long as possible. And if you're private pay, that means you're in control of where you're receiving care, whether it's home care, whether it's assisted living. If you're Medicaid, you're going into a nursing home and you're going to be sharing a room with one or two other people, and you're not even going to be able to choose the nursing home you go into. You'll be an approved nursing home in your recognized regional area that's approved by Medicaid. It's two different worlds, and that's why life settlements for long-term care are such a valuable tool, because they'll help keep somebody private pay for as long as possible, but they won't jeopardize their ability to go on Medicaid in the future.
So talk to me about something you just said there. Again, in our world, we're handing a check over to a client. A lot of times we don't know exactly, but sometimes we do. You just mentioned that if you do get this check via your life settlement proceeds and you try to pay for long-term care, you might not get that policy. You may be a little on the unhealthy side or whatever it is. But you just mentioned something that
a long-term care insurance policy, right?
Right. But you just mentioned something that maybe would be easier to qualify, or that's the question. Is it easier to qualify for an annuity with a long-term care rider? Tell us more about that. If we were handing a client this check, he can't get just long-term care coverage, but he can qualify for an annuity with that rider. Tell us more.
So now to qualify for an annuity with a long-term care rider, your horizon for needing care wouldn't be immediate, but it may be something within let's say a year or so out. So you'd be putting your money into an annuity. And as you know, annuities are designed to protect money. Okay. You're getting a guaranteed monthly payout for the rest of your life, and potentially even establishing survivorship for a beneficiary. But you're setting up an annuity with the money, which will protect that money from any market downturns, and in fact could even give you some market upside up to a certain limit, maybe like 5 or 6% return, but it's going to protect you from market downside. And it's also going to protect the money from possibly being squandered or somebody, which happens far too often, is financial fraud and abuse against seniors. All of a sudden, grandma's got $250,000. There could be an unscrupulous person in the family or someone else who seeks to take advantage of that. But if that money's in an annuity, it's protected. It can't be taken advantage of. The market won't jeopardize it. And you could include, if you qualify, a long-term care rider that can actually increase the amount of money that's in the annuity specifically to pay out towards long-term care costs. There's some annuity products on the market where, let's say you put 100,000 into an annuity, and a year or two later you need long-term care, and you now qualify based on ADLs to trigger your long-term care rider. That could increase that 100,000 to 200,000 or 300,000 tax-free, paid out towards long-term care services specifically.
Wow, that's outstanding. So let me shift gears here. You're out on the front line, we'll call it. You're part of now, but you're part of some very big financial planning associations and organizations. The life settlement concept is still new to people. We're 25 to 30 years old, but we still get met with apprehension, even though the NAIC, NCOIL, several different groups and associations have said, wait a second, no, life settlements are good, especially if you want to fund long-term care, if you want to fund an annuity, whatever it is. What do you see going on in 2025 regarding the perception of life settlements? We look at the TV, we can see a few big buyers that exist and they're continually advertising for life settlements. But what's the perception out there amongst broker dealers, IMOs, consumers, from what you see, since you're out there so much? Is that changing for the better?
It is. Over my 20 years to where we are today, I have seen this become much more mainstream, and a recognition of it being a very mainstream financial option. Oftentimes I see it sort of like the quick comparison for the layman in some kind of financial services world is, it's sort of like a reverse mortgage on a life insurance policy. And we see reverse mortgage ads all the time with Tom Selleck, and we see life settlement ads all the time on TV, as well as Medicare Advantage ads and drug company ads. Those are the big four. Those are the big four advertisers that are getting to the eyeballs of seniors who would be candidates for enrolling in a Medicare Advantage plan, looking at a reverse mortgage, and looking at a life settlement. So that mainstreaming has come through in a couple of ways. On the one side, organizations like yours, mine, that have been out there educating distribution, agents, advisors, but other unique areas too. We spend a lot of time with elder law attorneys, with the senior. We still work with senior care world all over the place, constantly educating them. But now we have this reinforcement of, you've seen the TV ads, and that really goes a long way. So I think the perception of life settlements has become more positive, continually growing in a positive direction, not a negative direction. And honestly, like last week, I was at a big agent conference where I was the featured speaker, and somebody came up to me and said, I remember 20 years ago when there was a company out there raising money from one person at a time to buy one policy at a time, and it was a big mess. I'm like, oh yeah, I've heard about that. That is long since gone. That is long ago. And actually I said to him, because I couldn't help myself, I said, in the last week, there have been more complaints about insurance products and insurance carriers than there have been about life settlements in the last decade. Let's put some perspective on this. This is a very well-regulated transaction. I mean, 45 out of 50 states have a very solid regulatory basis for the transaction. Billions of dollars a year in settlements being done. And you have a real meeting of the moment over these next 5 years. I actually wrote and published and released a white paper last month at the Medicarians conference called Financial Security 2030. And in that white paper, my latest one, we talked about some of the demographic drivers over these next 5 years. And think about this. For years, we've been talking about how 10,000 baby boomers a day turn 65. Well, in 5 more years, 2030, the last baby boomer turns 65, and the first Gen Xers start turning 65. This is a significant window over these next 5 years, which is coming at the exact same time that there's serious pressure on entitlement programs like Social Security, Medicare, Medicaid, and more need for personal responsibility and the ability to handle long-term care costs, healthcare costs, retirement needs. So I think you've sort of got, a intersection of the mainstreaming of the industry from the efforts, educational efforts like we've all been doing, plus what's going on in the media, the demographic push of going through the door of 2030, where all the boomers are now 65, and here comes Gen X, and the economic drivers of the pressures on programs like Social Security, Medicare, and Medicaid. Don't forget, Medicaid's the biggest payer of long-term care services in this country, and seniors are getting very nervous about Medicaid cuts, Medicare cuts. Will the programs start to go insolvent? And so the need for private pay, personal financial responsibility becomes critical. And here's life settlements with 260 million life insurance policies out there with over $12 trillion of in-force death benefit ready to be part of the answer to that problem.
Huge problem. And as we've discussed on past shows, you've got 500,000 life insurance policies that end up in lapse or surrender every year. Our industry buys somewhere around 3,000. Typically, the policies that get presented to us are by insurance agents. It's the financial planners that we continually try to educate on this option. The Morgan Stanleys, the Raymond James, this, that, and the other, that they look at our industry with bewilderment. And I've always thought some of the reason is because they don't really understand insurance. Where do you see the financial planning community, the guys that they're used to putting their clients in the brokerage account, selling them stocks and bonds and this, but at the same time, they're in front of their client, whether that client's high net worth, mid net worth, or low net worth, and they can look over here under this shell and say, well, hey, you have this life insurance policy. If you don't need it, want it, or can't afford it, or what I see going on now, and you can comment on that, this is these universal life policies that were sold 10 years ago, 15 years ago. They were projected to run into clients, let's call it the early 80s, and then all of a sudden no more premiums and cash surrender values were going to be up here. Yet then a client hits their 80s, cost of insurance gone up, premiums gone up, and the cash surrender values have gone down. And now they're looking at this universal life policy and saying, what in the heck did I get myself into? And here we have this option here, yet the financial advisor is still not accustomed to even bring up the life settlement option. What do you think is going to take to get that community, not the insurance agent, the financial planner, to really grasp our industry so they can intelligently talk to their client about, hey, I know you own this life insurance. I may not have sold it to you. That's fine. But we can turn this asset into hard cash that you can reinvest into this annuity that I'd like to sell you with a long-term care rider or possibly long-term care. Where do you see our industry really being able to get into that group of financial planners so that they understand and start to talk to their clients intelligently about life settlements?
It's a couple of things. One, you said it without saying it. Let me just put a bow on what you said, and it's positioning with them. Life settlements is a means to an end, not the end in and of itself. Okay, there are certain practitioners in the life settlement world where it's just very transactional. Let's get a settlement done. Let's split up the money and everybody move on. But for the financial advisor, they've got they need to look at it in many ways the way we brought it to the long-term care world. We weren't selling the life settlement transaction. We were offering a financial solution using one of the most widely held assets that anybody has, and people recognize that. In many ways, you need to be, the life settlement world needs to speak the language of the people that they're dealing with. Instead of trying to get people to speak your language and understand you doing things the way you want to do it, you need to speak their language and do things the way they want to do it. So with many of those financial advisors, this is the other piece of it. One, means to an end, right? We're going to do a settlement to liquidate an asset that now has available AUM, and we can do a number of different things with that. If that's what you're selling, a way to liquidate an asset to get AUM and address financial needs of clients versus, hey, let me teach you about life settlements. Two, you got to remember, particularly for the financial advisors, for many of them, they're fee-based advisors. So they're not going to be holding a life insurance license, a life settlement broker's license. They're not going to be interested in brokering a settlement. They're not going to want to take a commission. And one thing that bothers me, and I run into this once in a while, is I'll talk to an advisor or somebody who'll say, "Oh, I was talking to somebody in the life settlement world. They said I didn't need it. They would pay me a fee. They would, and I just say to them, look, remember, if you're going to participate in the sale of a life insurance policy, what do you have to have? Well, a life insurance license. If you're going to participate in the sale of an annuity, what do you have to have? An annuity license. So what do you think you have to have if you're going to participate in a life settlement? A life settlement license. Now, there are a couple of ways to skin that cat, right? There's brokered settlements, and you guys are probably among the very best in the business at brokerage settlements. I look at you as founding fathers. I'm talking to the Thomas Jefferson and Ben Franklin of life settlement brokerage. But there's another way to do it too, and one of the ways we approach it is a referral fee-based no-load settlement, which is much more in line with the mentality of attorneys, financial advisors, fee-based advisors, versus brokered settlements. And that's two different ways to approach the market. You've got to go to your distribution point, speaking their language and understanding how to work with their model, as opposed to trying to figure out how to teach them your language and work with your model.
All right, Chris, I got another question for you. This is an easy one. I'm going to tee it up. So when you transition to, the Retirement Genius, I was at your first live appearance as the Retirement Genius. And I believe you took the main stage on day one and said the word out loud in your presentation, life settlements, which was the first time at NALBA that had ever been spoken from the main stage, out of someone's mouth. I've seen you host other different types of discussion groups with people in the life settlement industry. And this year, to name our good friends at Coventry, we're one of the main title sponsors of NALBA. That was inconceivable 10 years ago, that you could have ever seen Coventry's name or my name or anyone's name up there. And now with great regularity, we are on the main stage through your efforts to do that. What are some of the secrets that Chris, Mark, and I could learn that would help us present life settlements in a better way when we talk to advisors or clients or whomever, where you tend to talk about other things and life settlements usually ends up being the answer as opposed to leading with it? I think that's part of your magic. You talk a little bit, we talk about the ARP article, but so tell me some things you've done, other shows that we don't attend that I don't see you go to work at, that would kind of help all of us understand how to present life settlements a different way.
Yeah, and it is interesting. There's a lot of meetings and conferences I go to where I am literally the only practitioner of life settlements present. And it continues to be, one, the idea that I speak about life settlements as a means to an end, not the end in and of itself. And I do get feedback once in a while about others who've presented on life settlements where they're just really hammering home, here's how much commission you can get, that kind of thing. And I never even touch those items. That's not even, I always try and come across, one, educationally and scholastically versus sales, and certainly not ever insulting or denigrating anybody else. I mean, I always lift up the industry. There are, in any business, there's going to be some bad actors out there, but I feel like the life settlement world has really settled into some very, very solid industry leaders that are being recognized. And as you point out, a few years ago, it wouldn't even have been thought of to be on the NAILBA stage, the NAIFA stage, other organizations, where now it's moving forward and taking some real prominence. So means to an end, an educational versus sales-oriented approach, and positioning. And this is also why I'm in so much media. If all I was out there known for in the media world, the press world, in the last week, I've probably been interviewed by 5 major publications. I've been U.S. News and World Report, Barron's, Fortune, Yahoo Finance. And it's not because they're looking for me because I'm a life settlement oriented person. I'm talking about retirement issues, senior issues, the unique financial challenges that are brought on by aging and declining health, and that you get to a certain point where, as the window of your options narrows, you need to pay attention to what options are there for you. And I position life settlements always as, not because it's a strategic move on my part, it's because I have believed in it for 20 plus years. It is an essential part of the tool. It's one of the solutions, one of the tools that you can bring to the table to help people solve that unique financial challenge. That once they're retired, they're aging, their health's declining. Well, life settlements is unique in that it is, as far as I know, one of the only financial options out there that will actually reward somebody economically the older and sicker they're getting. You almost can't find that anywhere else. So that needs to be known, but I position it as a piece of the puzzle, a means to an end to solve a problem, and educate the people, not sell to the people that you're talking to. And it just comes across completely differently. And, and I do have the advantage of I'm a published author. I've in a lot of press, my political background, political testimonies, all that stuff adds up to give me a certain differentiator, I think, in terms of how I'm looked at oftentimes. But in the end of the day, if you come to the table selling hard and selling one thing, you're going to get a completely different reaction than the approach that I'm talking about.
Yeah, you hit the nail on the head there. As of, I would say even recently this year, that's really been, my approach when I talk to advisors. It's not just life settlement. It's, hey, I have a solution to a problem that your client may not even know exists. And they're like, what are you talking about? I'm like, well, have you sat down with your client and done a review of their universal life policy? Have you sat down with your client and looked at their term policy? Those are 2 hard assets that they own, that one might not be performing to expectations. I'm talking about a universal life policy. That's what we see predominantly in the life settlement industry. 80% of our sales are probably UL policies or some version. And as I mentioned earlier, these UL policies, we're seeing more and more and more, and people that are much smarter than I in the life insurance industry are now coming out publicly stating that these UL policies aren't working out as planned. Clients are getting in to their 80s. They've dumped in hundreds of thousands of dollars, yet their cash surrender values aren't rising, but the premiums are. That's a problem. Well, guess what? We have a solution to that problem that can lead to offsetting your medical costs, to purchasing an annuity, to whatever it is. So I know that I've changed the way I've talked to people. It isn't just let me tell you about life settlements, how much money you're going to get. No, let's solve this problem that you have that you may not even be aware of that's brewing. And I think if you approach advisors and clients in that aspect, it tends to work.
Let me add this. As you know, I'm on the board of LISA, and we just completed our 4th data collection survey. And once again, we saw that the consumer, the seller, gets a significant multiple of what they would get if they were to surrender the policy, or worse yet, lapse. This year, it came out at 6.6 times more. So one year we were at 6.2, one year we were at 5.2, one year we were at 7.8. So roughly thereabouts, you get about 6.5 times more. So the decision is easy as we talk to these advisors. When they talk to us, when they come to us about life settlements, is that a couple things. Number one, you're talking to us, which is good. But realize this, if you don't talk to us, somebody else will talk to your client, and your client will do this without you. The biggest thing in a life settlement, we talk about selling commission. Commission is the product you're going to make, the byproduct of what you're going to sell them with the proceeds of the 6.5 times more than they would have got when they surrendered. So when you talk about people taking commissions, life settlement commissions are not big compared to this commission generated by the sale of an annuity or something like that. So that's where we've had the most success. The reason I brought you up, Chris, is the more people we get like you, right? They don't look at you. You're not pigeonholed into a settlement guy. I am, Mark is. That's fine. I wear that badge proudly. But they tend to believe they're missing something when it comes out of your mouth. I really think they're like, wait a minute. Why is this guy telling me this? It's not just settlements. You give them 3 or 4 or 5 other things to think about. And there's probably in all those scenarios, 3 or 4 of them they never thought of in their life. So folks like that is why you're on my podcast. I mean, I'll be that honest with you, other than I like you too. But I just think that we've got our work cut out for us. We've got a lot of good news. We don't know how to maybe deliver it properly, but I certainly value, your insight and some of the things that I've watched you do over the years. And I think Mark's got another question.
I want to jump in. When we do these podcasts, I always like to take a video or an audio clip. And it's if you've learned one thing from this podcast, and Rob, you just said it there. We just had the 2024 data collection from LISA, the Life Insurance Settlement Association. To those of you listening, if you want information on this industry from a third-party perspective, not from Mark, not from Rob, not from our firm, not from Chris, go to LISA. It'll give you the buyers in our industry. It'll give you the brokers in our industry. It'll give you a wealth of information about the life settlement industry. But Rob, you just said something right there. The 2024 data collection showed that on average, a seller received 6.6 times more than the carrier's cash surrender value. That's such an important aspect of our industry right there, that if you're a senior and you're looking at your policy and you're thinking, well, maybe it's not a fit for me, what do I do? This is just one of those options. And now we have real hard data from last year that showed the average seller got 6 times the carrier's cash surrender value, opposed to letting that policy lapse or surrender with that carrier via life settlement, which in turn, they can take that money. And as we started this conversation off, put that money into an annuity, which now I just learned you can add a long-term care rider. So that's such an important piece of data that we now have and that we continually try to share with anyone, consumers, advisors, IMOs, broker dealers, everyone, that this industry is legit, it's real, it's here to stay. And if your client wants to explore it, guess what? Here's some data we can show you on as to why it's so important. So good piece of information, Rob. Yep.
I would say thank you for sharing the most latest data, 6.6x over cash surrender value. And from that, I would say to anybody that's listening to this, if you're an insurance advisor of any stripe and a financial advisor of any stripe, to ignore giving your client that information and making sure at a minimum they are aware that if they have a life insurance policy, it could potentially have significant market resale value, secondary market value for them, you're pushing up against violating your fiduciary responsibility of looking out for the best interest of your client. So one, and I have talked about this for years, I believe that informing people about life settlements is a fiduciary responsibility. And two, the process of how to communicate this to those that would be intermediaries to talk to their clients, it's, as we've discussed, but to put a bow on it again, it's starting with the problem and working backwards into the solution, not starting with, here's how much you can get in a commission for a life settlement, let's rock and roll. It's, what are the needs of your client? Let's now start talking about what solutions could be available. And if there's a life insurance policy sitting there, quite frankly, I have a fiduciary responsibility to inform you that this transaction is their legal right, could, as of the most recent data, generate upwards of 6.6x over their cash surrender value, and infinite greater value than just lapsing a policy and letting it go. It's just going to take consistency, the consistency that we've all brought to this for years. As I've gone out and I've preached this as part of the broader perspective of retirement planning, long-term care, how to address that huge overlooked need until one day it's dropped in a family's lap and it's a time bomb ticking and they got to scramble to figure it all out. These are tools that we're bringing to the table. We've all been practitioners in this for decades. You are among the earliest practitioners. I've had nothing but respect for what you've done all those years, right up to being able to be on your podcast and a very thoughtful discussion. I'm really happy I could be a part of. I look forward to having a chance to visit again sometime in the future. I'd join you again for another discussion. I feel like there's so much to talk about in the time we had. We barely got started, but I'm glad we could at least start this discussion and continue it as friends, as colleagues, and as educators in the marketplace.
We appreciate it, Chris. Bill, you're still there?
Oh, no, I'm here, and I'm fascinated. And what I do appreciate bringing Chris to the table is that he does cast this issue, this product, in a very different kind of light, which is it is a solution. And to that end, Rob and Mark, if there are financial advisors who are listening to this podcast and who have questions or maybe want to explore this more, who should they reach out to, and what's the best way for them to do that?
Sure, I'll jump in real quick. Always can reach me on my cell phone anytime in the morning until late at night at 954-326-9378. And our email here, my email, markm@lisettlements.com.
And my email is rob@lisettlements.com. And to beat Mark, I'm 24 hours a day, 7 days a week on my cell phone, 954-599-4433. Chris, how do they get a hold of you?
I'm not hard to find. Just go to retirementgenius.com or just Google my name. If you want to see and read some of the information, things that we've done, just Google my name. I'm not hard to find, and I'm impossible to forget.
I'll second that, actually, Chris.
With the bow tie, you can't forget them.
That's right. There we go. There's break out that bow tie you've never worn before, Mark. Well done.
Sorry, gentlemen, and everybody out there. Sorry that we didn't do the bow tie today. It's part of the mark. It's part, and it works. I literally, Rob, to this day, I've got people coming up to me in airports asking me, "Where's your bow tie?"
There you go. Well, next time we're on, it's going to be a bow tie fest. That's what's going to happen next time around. Thank you very much. And for those of you who listen to this podcast who are not subscribers, hit the follow button and become a subscriber, because every time a new episode drops, you can give it a listen. You'll be notified and you can listen to more of these conversations. And if you're a financial advisor, I would advise you to, in fact, reach out to Rob and Mark, because this is a very, very interesting product. And to Chris's point, it's a solution. It is a potential solution for some of your clients, and you owe it to them to at least explore it, if nothing else. So until next time, I'm Bill Tucker on behalf of Mark and Rob. Thank you for taking the time to listen today. We'll catch you next time. Thanks for listening.
Thank you for listening to Unlocking the Hidden Value of Your Life Insurance, the show that helps you unlock the hidden value of life insurance. Click the follow button to be notified when new episodes become available. Visit our website at www.lisettlements.com or give us a call at our office line at 866-326-5433, extension 1017. You can also directly contact Mark Mrky at 954-326-9378 and Rob Haynie at 954-599-4433.